to me.
Well, it's like winning the lottery.
Yes.
And if you have the right ingredients, you got to hold on to it with both hands, because it can get done, and we've done it in the past.
So you're saying it's not a dollar and a dream,
It is absolutely possible. And remember, the principal reduction, along with today's low rates, the way they will complement each other will mean one thing. Feeling like you've won the lottery, bringing that monthly payment down to a bare minimum, and reestablishing that pride in home ownership. For a market right now where no one's talking to them. Who is talking to people that pay on time? Who is talking to that homeowner who is upside down, who has the same concerns as everybody else, who are listening to all these suggestions of what can I do? And people say, let's just wait it out. You don't have to wait it out. You can contact AMG and we can help walk you through it. It's not for everyone, but if you have the right ingredients, it's something you should absolutely pursue.
But what amazes me is the fact that you've got the short refi, you've got the reverse mortgage, you have so many things to keep pride in home ownership going.
I think that pride in home ownership may have been lost.
It may have been lost, but my point is...
in your emotional or passionate
well, here's the downflow of what you're saying, is that if people actually knew that this was out there, they'd also have pride in employment. It would make them drive harder to work better and be happy about their job to keep moving forward and do their dream. However, we've printed $3 trillion in paper, no gold standard, just straight paper.
We have all that gold in Fort Knox, though.
No, we don't anymore. We got $3 trillion in paper that we can't necessarily back, which is going to spike inflation. And we have every congressman, senator, and politician trying to get their name on paper, coming up with the next best thing, trying to recreate the wheel when certain things like this are in place and no one is talking about it. The banks, the banks
are definitely not talking about short refinances, because why would they want to lose? Let me discuss this from a servicing perspective.
Okay.
Ready? All lenders, based on pressures from our president and being socially responsible, and in the efforts of keeping homeowners in their home, have been very aggressive in modifying qualified homeowners. Now, bear in mind, these qualified homeowners are being modified because they are undergoing a hardship. That hardship often equals or equates to not performing on your present obligation. Then you have, on the other spectrum, homeowners who have decided to go down the short sale path. Two ends of the spectrum. Modifying, I've tried, short sale. Now you have people that are paying on time. The people that are paying on time to many mortgage lenders, commercial banks, is what's keeping them in the black. If you have the short refinance, don't they tend to lose the on-time paying borrower? They offer it. They just don't advertise it.
So in this whole process, you're saying that everyone works together as a team.
We can counsel you. We can take you by the hand, walk you through the chronological steps of a short refinance. Let me give you a loan scenario. To be honest with you, it's pretty much a easily understood process. Let's take a homeowner.
Ooh.
Well, when I finish, I think everything will make sense to your average homeowner, because you don't have to be a financial advisor to know what it is to save $130,000, $140,000. To save money is a universal understanding.
$1,000?
$140,000, $130,000 in principal reduction.
Principal reduction? The government's been talking about it for almost a year right now. No one's come up with a solution. you're talking about principal reduction with these loans, and the government's still not talking about it. You've got the product.
Well, I'm not sure where Congress is going with the principal reduction.
I'm not sure.
It's happening. It's happening every day with the short refinance platform. In a short sale, the bank is taking a hit, correct?
Yes.
They're working with the homeowner to sell the property for the best interest of all parties involved. In that same transaction, the bank takes a loss. They're forgiving principal, or maybe not, because they reserve the right to report their losses in the form of phantom income, if you will, to the IRS.
Mark to market, maybe?
Perhaps, but let me walk you through the execution of a short refinance. Homeowner buys a home, 2006, $500,000. In the year 2006, $500,000 was your average sales price. How much do you think that home is worth today, Tyler?
Nationwide, I believe levels of real estate value have gone down by approximately 25%.
Well, let's call it 20. Let's be confident.
Okay.
Let's say that same home, which was purchased for $500,000, which only 3 years later is still owed $500,000, maybe $499,999, but let's say $500,000. That same home is worth $400,000. The principles of a short refinance is to finance 90% of what the property is worth today. 90% of $400,000, Tyler, is $360,000.
$360,000
would be your new loan amount. Does not matter that you may have two existing loans. If you have two existing loans, both will be negotiated under the short refinance. And a new first mortgage for $360,000 will be used to settle those loans in full. Remember, the mortgagees presently are participating in the short refinance. Now, what have we accomplished thus far? We have a lender who is giving us a reduced payoff in the amount of $360,000. So what happens to that $140,000? Any ideas? That $140,000 is forgiven. Let me put a little asterisk there. Forgiven for the purposes of the refinance. There will be a lien release. There will be a satisfaction of mortgage. But bear in mind, they reserve the right to report any loss to the IRS. This to be addressed at a later date. The $360,000 mortgage has a second advantage. The second advantage is, well, let me ask you a question, Tyler. Who's paying the settlement charges on this transaction? Who's paying what homeowners regard as closing costs?
Tell me.
Okay, it gets even better. And that's why there's so much speculation about the validity and the actual ability to obtain a short refinance. Tyler, the same lender that's forgiving the $140,000, they're also paying your closing cost. How could they not? Are you paying them as a homeowner? No. You're upside down on the home. You owe more than it's worth. And no one's asking you to write a check.
So the lender is not only giving a principal reduction, which has gone through every Congress, Senate, statewide, nationwide, and they can't...
Lenders are participating to get their money now and not holding out for a toxic loan to go bad. That's really the foundation of whether we can accomplish this short refinance for you. If they're forgiving the $140,000 and taking $360,000 in this scenario, they're not netting $360,000. They're netting $360,000 less settlement charges, because the amount of money required to close a loan is called settlement charges. So who's paying your closing cost? The same lender that forgave the $140,000. They're not netting $360,000, Tyler. So what are we talking about? We're talking about obtaining a short refinance that's going to give you the lowest rates in 40 years with no closing costs.
Arthur, thank you very much for being here. AMG has certainly come up with a solution that can help many people. We appreciate you being here, and we look forward to having you here again. I'm Tyler Cornell. This is BrightsideTV.com. Submit your solutions to Brightside TV.